least, what are we going to do with the meal in the coming years? Can meal become so low in price that profitability of poultry and aquaculture feeding increased, production increases, demand increases? This must be the way out of this dilemma. Buying demand on the meal side with very low prices. Indonesia is by far world's largest exporter of oils and fats, and if we get problems in Indonesia on the production or export side, you as an important importer will feel it. And my concern is that we will feel it quite soon, that the pace of Indonesian exports we have seen in the past couple of months will not continue. Palm oil, India is the biggest palm oil importer. As you know, we expect palm oil imports to rise by about 1 million tons here in October-September 2025-26. At the moment, soybean oil is preferred. At the moment, palm oil is not competitive. Sunflower oil is not competitive at the moment. This is going to change. Soybean oil prices will appreciate on the back of declining export supplies, and palm oil and sunflower oil will become more attractive. Therefore, the current trend of declining sun oil imports in India and China and other countries will be reversed, I think, in the January-March quarter. January, March, April, June, where we see considerable production and export supply pressure from the Black Sea as well as from Argentina. Indian imports, we think, will rise to approximately 18 million tons in the new season. This is October-September. It was not possible to repeat the success story in grains in the oilseed sector here in India. Soybean production on a declining trend, crushings facing difficulties here in India, farmers are switching to other crops, yields here still far below potential. This is something which really should be changed, and you have the models to do this, to bring about a change here with corporate farming and with other means to raise the yields, to reduce the cost, to improve the competitive position of the farmer. It is no solution to raise the minimum support prices year after year and not be able to support these support prices. Market prices are going down. So we are seeing import dependence of India rising further. You know, where we come from, we came from 2 million tons imports about 18, 20 years ago to, we think, 18 million. It could become risky if world export supplies no longer continue to rise sufficiently. Probably India should reconsider building an additional supply source by allowing oilseed imports or by allowing GM crops in the domestic market or import oils. Vegetable oil stocks in India have recovered, yes, but they are relatively low. I think they are too low. So the job for the coming 6 months is apparently not only to import to satisfy consumption, which is rising, but also to replenish stocks. In our opinion, India will contribute to a bullish price scenario for vegetable oils in the coming months. Let's talk about palm oil. Palm oil production has fallen sizably below trend. It has fallen below trend. The growth rates have halved from what we have been used to 10, 15, 20 years ago. So we can also say palm oil production has lost the growth dynamics. Big challenges. In the current year, calendar year 25, there is a considerable recovery in production, which has created more favorable palm oil prices, a good feeling, and there will be a good recovery in production this year. But will it continue in 2026? No way. No way. It will not. The recovery we have seen was mainly because of the shortfall in 2024. So don't extrapolate the recovery in palm of 2025. Don't extrapolate this in 2026. It's not going to happen. All the challenges and constraints are still in place. Nothing has been solved. The problems have become greater because of Indonesia. Lack of replanting, disease pressure, Ganoderma is spreading, and many problems we have discussed often. The yield trend is down. It has stopped declining, but the recovery has been relatively modest. The expansion, look at the blue bar, the expansion in the mature area palm worldwide, the expansion has slowed. This is the brown bar. The expansion has slowed to 300,000 hectares a year, from more than a million hectares. From a million hectares 10 years ago, from 1 million hectares 10 years ago, the expansion in the area has slowed to 300,000 hectares. Production growth has slowed considerably. In 2025, world production is rising by 4.1 million tons, yes, but this only because of the shortfall in 2024. For next year, we look for a very moderate expansion of probably 1.3 million tons, which is by far not sufficient to satisfy world demand. Now, in Indonesia, the intervention of the government in the oil palm industry by seizing more than 1 million hectares of land, and probably more coming, is, ladies and gentlemen, is a very serious step. And I would also say, from my perspective, it is a threat to exports. Palm oil production and palm oil exports will be affected. I have no idea what this is going to mean in absolute numbers. We are so far assuming that Indonesian production rises by 0.7, 0.8 million tons next year only, but I would not be surprised if we get a much smaller expansion or even a stagnation, because investments are being reduced. My plantation could be the next one. Fertilizer may be affected. So this is another new uncertainty which could have an impact on exports, and it slows production, particularly if the government enforces B45. I'm not going to talk about B50, this is not possible, but even B45 will be a big challenge. You can see from the blue line that domestic consumption of palm oil in Indonesia has almost reached the level of exports. Palm oil exports in Indonesia are declining. Probably in 2026 will be the first year in which domestic consumption exceeds exports. This is a very alarming development if other palm oil producing countries cannot compensate this, and if seed oil exports cannot increase sufficiently, and this is definitely bullish. But you know, whenever we say something is bullish, we should not forget that there are going to be reactions on the demand side in the food sector, that consumers start rationing, but particularly in the biodiesel sector. So any bullish driven market has an end at a point where biodiesel mandates are reduced. And this is something we have to keep on the agenda for next year. It is not going on very, very sharply because there will be demand response. So these are our numbers we currently work with, all very tentative and subject to change. Very tentative. But just look at the numbers for 2026. We expect unchanged to slightly lower production in Malaysia. Indonesia, look where Indonesia comes from. 3 million ton decline in Indonesia because of weather, mainly because of weather in 2024. Weather improved, biological yield cycle, yields improved, more fruit bunches available, so a big recovery to 49 million, probably slightly more than 49 million tons this year. But on top of that, very little growth in 2026. Recovery in Central America, Guatemala, Colombia, Honduras, we expect better production. Brazil, better production. In Africa, only moderate increases. Overall, the global palm oil production is not rising much. And we have to watch this. This is an uncertainty which could have a big impact on prices to the upside if anything happens there. Very important, palm oil no longer needs to gain market share with price discounts. No longer. Palm oil will not go down $150, $200 below soybean oil as we have seen 15 years ago. When every year 4, 5, 6 million tons of additional palm oil had to be consumed. No. So palm oil will continue to be priced relatively close to soybean oil and sunflower oil, much different from previous years. So let's talk a little bit about oilseeds. To what extent can higher oilseed crushings compensate problems in palm? So first of all, soybeans, the big elephant, soybean supplies are ample. This could change if, in case of weather problems in Brazil. Dryness at the moment in Central Brazil, in Bahia, in Minas Gerais, in northern areas, but we are very early in the season. Weather forecasts talk about La Nina. La Nina means generally dryness in October, December, but it's early in the season. So we, at the moment, we expect another big crop, actually record crop in Brazil, and no problems in global soybean supplies and price pressure. Big increase, and we are assuming 5 million tons increase in Brazil. It could be more if weather is perfect. Lower crops in Argentina, the US, Canada, surprisingly high canola crop. We at the moment work with 20.6 million tons, but it could be 1 million or more than 21 million. So canola, rapeseed, a little bit under pressure at the moment. Bumper crops in Russia, record rapeseed, record soybean, record sunflower seed crops in Russia. Decline in Ukraine, mainly in soybeans and rapeseed, and a good crop in the European Union. Yields in oilseeds are growing, contrary to palm. And there is a lot of potential in many countries to raise yields, and India is the top example, where much better yields should be possible with the right system. Production of soybeans worldwide virtually flat, rising only slightly, but still at a production surplus. Soybean stocks worldwide will continue to rise, in the US becoming very burdensome because of lack of exports. China will continue to increase crushings. We have been surprised about the high crushing rates now in July, August. China continued to expand soybean crushings sizably. Rapeseed is down, canola crush is down, but overall further increase in China. We had not expected the good meal offtake in China. Livestock production continues to expand, except a shrinking population. The situation in China in edible oils is different. Edible oil consumption is at best stagnating, probably declining, and therefore Chinese imports of oils are on a declining trend. China is satisfying all of its import requirements in South America. Now, for September, December, we estimate that the South American countries will boost their exports to China by 16 million tons. This is more than what normally the US exports in this period. So no need for US soybeans. And the program, the special tax-free program of Argentina last couple of days was definitely good news for the Chinese government, so that they could buy an additional 2 million tons of soybeans in Argentina for shipment October, December. So I show this slide because the big increase in South America happening now, September, December, is bearish for soybeans in Chicago. Definitely. So let us jump a little bit here. The US soybean stocks will at least, the soybean stocks will at least rise to 13.5 million tons, 550 million bushel, probably more. Probably we are still overestimating soybean exports with 40 million tons. Now, many importing countries are switching from South America, from Brazil to the US, because the US soybeans are priced 10% below Brazilian soybeans. So many non-Chinese importers and crushers take US beans because of lower prices. But still, the lack of Chinese demand is a very bearish factor for soybeans, and it's also bearish for soybean meal, pulling down also soybean meal prices. This could change. The Chinese may start buying soybeans in the US, probably for political reasons, when they start negotiating a new trade agreement, or to get some hedge in January, March, before a new crop supply starts moving. So I would not rule out that we are seeing some Chinese business for any of these reasons, but it will be much less than normal. And the pressure remains on soybeans on the Chicago oil trade. Sunflower seed is at a premium in green. Sunflower seed at a premium to soybeans at the moment. Yes, lower crops than expected. Harvest delays, 2 weeks, 3 weeks in the Black Sea region. Farmers holding back, crushers have difficulties to cover. Some of them have an urgent need to buy. This is keeping prices high for the moment. I think this is temporary. For me, sunflower seed and sunflower oil prices are overvalued and should go down, or if soybean oil and palm oil prices appreciate, don't follow them upward. So the net effect, in my opinion, will be that the premium of sunflower oil relative to soybeans will disappear sometime in the first 4 months of 2026. But of course, farmer selling is a big swing factor to watch. Russia, very good crop, not as good as expected, also affected by dryness in the south. Still a wide range of estimates, but most likely a record crop. Crushing's starting slow, and the more demand we are losing in October, December, the more supply will be available for the rest of the season. So January, March, April, June, we should see a lot of pressure, and I think then India will be on the agenda buying larger quantities of sunflower oil. Argentina likely to harvest a bumper crop for the second consecutive year. Argentina currently offered at a discount to $60, $70 vis-a-vis Black Sea. So Argentina is pressing. Argentine sunflower crushings likely to be very high in January, February, March, when new crush capacity comes on stream. And if the crop turns out again above 5 million, a lot of higher sunflower crushings in new capacities, partly at the expense of soybeans. So I'm bearish for sunflower seed and sunflower oil, which does not necessarily mean a decline in absolute prices if palm and soya appreciate. Yeah, uptrend, and this uptrend has to continue in coming years. The global market needs more sunflower seed, high oil yielding, more rapeseed to offset the losses in palm. or put it better, to offset the lack of growth in palm oil production and export. Yeah? So rapeseed turning out less than expected, although Canadian crop is higher. I'm sorry. Rapeseed should continue to grow. Prices should change on the global market, favoring plantings of high oil yielding softseed, sunflower seed, and rapeseed at the expense of soybeans and grains wherever possible. Very briefly, oil meals. Oil meal production rising together with rising crushings, of course, and as long as we have no weather problem, as long as we have a weak price tendency in oilseeds because of high supplies, meal prices will be under pressure. And this was the case in the last 12 months. I think this will be the case in the rest of this year and in 2026. Meal under pressure. Crushings, oil demand driven. So, concluding statements. Bearish outlook for meals. We think there is more downward potential in the meal price. In Chicago, I mentioned this already, we may go down to $250 per short term. Palm oil production rising very slightly. Our guess at the moment is 1.2 million ton increase for calendar year 2026. Ladies and gentlemen, this is bullish. And we don't know whether we are correctly interpreting the developments in Indonesia. I don't know. I don't know what happens. I don't know what the government is doing, and I don't know what the government is heading for. So we have to watch. But this is bullish. It's not enough. We need more palm, particularly in a situation in which world exports of soybean oil are shrinking in the environment of rising biodiesel production and domestic oil consumption in the US and Brazil. Production growth is losing momentum, raising the risks for importers, net importers, and consuming countries. Make sure that you have sufficient stocks in case of supply disruptions. This is our underlying estimates. Again, subject for change. We assume that the US consumption of oils and fats increases by 2 million tons. If that's wrong, US consumption declined this year by a lot. And the decline in biodiesel production, the decline in biodiesel production in US and the effects on imports and exports were a bearish element in our market and helped the global market to reach a situation with relatively tight supplies. But if the US government brings the biodiesel program in place, it would translate at least in an increase of 2 million ton more vegetable oils and fats import requirements. Now, will the government do this or not? I don't know. US government Trump is under considerable pressure because of declining exports and prices. What can he do? If China is not buying and prices are falling, it would be a relatively easy strategy, helping the farmer by actually putting in place higher mandates, which have been talked about already, but it's not yet confirmed. So we all don't know what's going to happen. So will the bearish price trend for US farmers and the prospective build-up of stocks of soybeans and grains, will this be a factor stimulating the US government of pushing in place an aggressive biodiesel policy? If so, then we have this increase of 2 million tons. Question mark. For India, we assume a expansion of 0.8 million tons. I do not agree with what was said yesterday that demand is weak. I just don't believe it. So we will meet next year, and we think India needs another 1.5 million tons of imports. Yesterday's numbers were more bearish, but I understand that everybody who needs to cover is pessimistic on the demand side. Sorry for this statement, I put it in brackets. Brazil is another example where we expect a good increase in biodiesel production and therefore a rising domestic consumption at the expense of exports. And the big game changer here in our field is Indonesia. We think 1.3 million tons is our guess. This includes 0.3 million tons in October, December, but of course we don't know, which is B40, but of course we don't know what's going to happen next year. So big question mark for Indonesia also. Now, last, biodiesel. 2025, this is our estimate which we published today in our weekly report with a closer analysis. 2025, look at the big decline in the US, and this 14.2 is probably still an overestimation. Significant decline in the European Union, Argentina, very low. But Indonesia, 13.6, quite big number, 13.6. Overall, world production of biodiesel declined by 2.4 million tons. This is the biggest decline ever. And this helped to stabilize the market. This contributed to the downtrend in prices we have seen in calendar year 2025. Now, this is going to be reversed in 2026 if government implement their mandates, and this would be bullish. And this would be very bullish, with the side effects, of course, that demand rationing will happen at a stage, limiting additional price increases. Yeah? You see, very brief, you see on the right side, the gap between gas oil and crude palm oil has widened, making it more expensive to subsidize the biodiesel mandates in Indonesia and other countries. So, to close, stocks are going to decline. We will see how much. Uncertain. But I think the trend is down. Stocks usage ratio is declining, creating a more risky environment. What does it mean for prices? Coconut oil prices overvalued, considerable downward potential in 2026 if our forecasts materialize that yields are going to improve. And trees have recovered from previous drought, so we should get considerable pressure in coconut oil. And palm kernel oil, of course, it looks whatever you look like. There was a considerable premium of $250 or $300 even for EUDR, palm kernel oil, which no longer is needed. So, of course, a lot of confusion in the market. Soya oil prices, as I said, undervalued relative to palm and sunflower oil. I see an upward potential of at least $100 to $150 in soybean oil for the next 6 months. Could be more. That palm and soybean oil this week is at a discount to palm oil in Malaysia. This is not justified. Soybean oil is undervalued. I think it's a good buy. High volatility ahead. All the four oils will fluctuate, and this is new, in a relatively narrow range in the future. No need for palm oil anymore to gain market share by price discounts. Sun oil will lose its premium over soybean oil in January-June 2026. Palm and soya oil are set to rise by $100 to $150 in January-June, probably more if some surprises happen on the production side. With this, I thank you very much for your attention. Thank you.
Ladies and gentlemen, a round of applause. Louder than this, as the full room that we have every single day, request you to kindly get back on stage, sir. Well, I'm sorry, I believe you were walking the ramp. They're looking forward to that, actually. But right now, I have the pleasure of